So, quick question. If you got in a car accident today, do you actually know what your insurance would pay for? Not what you hope it would pay for, and not what you assume it would pay for. What it would actually cover. Most drivers don't, and that confusion costs people thousands of dollars every year. So today, we're breaking down what auto insurance really is, how it works, and why misunderstanding it can wreck you financially, even if the crash wasn't that bad. Let's get into it. What auto insurance really is. Auto insurance is not car protection. It is financial damage control. Think of it like this. Driving is risky. Accidents are expensive. Insurance exists to decide who pays when something goes wrong. That's it. It doesn't make accidents fair. It doesn't erase mistakes. It just moves money around after chaos. And understanding that changes how you buy coverage forever. Now, every auto policy, no matter how complicated it looks, boils down to three buckets. Damage you cause to other people, damage to your own car, and injuries from an accident. Every coverage you see on your policy fits into one of those buckets. If it doesn't, it probably doesn't matter as much as they made it sound. Now let's talk about liability. Liability coverage pays when you cause damage or injuries to someone else. You rear end someone, you run on a stop sign, you drift into another lane. Your insurance steps in and pays for them. Not you, not your car, them. This is why liability is required by law. It protects the public from you. And here's the scary part. If your liability limits are too low, you can be sued personally for the rest. Yes, your savings, your paycheck, everything. Now let's talk about your car. Collision coverage pays when your car hits something. Another car, a wall, a pole, a tree. If it's a crash, it's collision. Comprehensive coverage is everything else. Theft, vandalism, fire, flood, hail, and animals. If your car is damaged and you didn't crash into something, it's probably comprehensive. No crash equals comprehensive. Crash equals collision. Simple. Now let's talk about the quote-unquote full coverage lie. Quick reality check. There is no such thing as full coverage. That phrase means whatever the salesperson wants it to mean. Usually it's just liability, collision, comprehensive. That doesn't mean everything is covered. It means the most common things are covered. Big difference. Now let's talk deductibles. A deductible is the amount you agree to pay first. If your deductible is $1,000 and repairs are $3,000, you pay $1,000, insurance pays $2,000. Higher deductible equals lower monthly bill. Lower deductible equals a higher monthly bill. There's no winning, just trade-offs. And most people choose deductibles without ever asking, could I actually afford this tomorrow? Now I know at this point you're probably asking yourself, what really happens after an accident? After a crash, insurance doesn't jump in heroically. It investigates, reviews statements, determines fault, applies coverage, then pays. That process takes time, and frustration happens when expectations don't match reality. Most anger towards insurance isn't because coverage failed, it's because people didn't know what they bought. Now here's where you come in. I want you to answer this in the comments seriously. Do you actually know what your insurance will cover if you crash today? Yes or no? And if you don't know, that's not a failure, it's normal. This channel exists to fix that. If this video helped you understand auto insurance even a little better, hit like, subscribe, and check out the next video where we break down full coverage versus liability so you don't make a mistake that follows you for years. This is Crash Course Coverage, and now you know what auto insurance really is.